Well, we're back with you here on the Market Day Report. I'm Marlon Bowling with you, your tour guide to the ag commodities. I want to welcome aboard Mr. Ted Seifried, and he is with Zaner Ag Hedge, and he's based in Chicago. He joins us right now. Interesting stuff going on in the markets, and all the world is watching developments in the Middle East and the Black Sea region there. That seems to be overarching everything that there is fundamentally to talk about in the markets here. Are the ag commodities just watching what's going on in the economic realm and the energy realm right now, or what do you think?
Well, Marlon, I would say livestock in particular really are. Cattle is always cattle or beef demand is always kind of a function of how strong or weak our economy is. And obviously it's been very, very strong, basically since pandemic and all of the stimulus money that got printed into the markets, inflation that we had. But now things seem to be changing. We've got a lot of global unrest, a lot of concern about that global economy and concern about our own economy. And when you have days like this where stock market is down, stocks are down, the dollar's down a little bit too. So that's kind of maybe softening the blow. But you have that concern once again over beef demand. And so therefore, you have days where we have some down days in cattle where we don't really have good fundamental reason to. It's really the outside markets. I think for the grains, it's a little bit of a different story. I think for the grains, because we have such a direct line on demand, right? We have export sales every week, which we had this week. And we have, crush for soybeans, and we have ethanol data for corn. We get to see how demand plays out on a weekly basis. So we're kind of more tuned into that. I mean, I do think there is a concern longer term that if we are headed into a dark, cold winter, so to speak, where we have a significant economic slowdown in the fall and into the winter, then you have to worry about all the commodities. That dollar could continue to strengthen. It's been on an absolute tear since middle of July. If that continues to probe higher, well, hey, that's eventually going to be a big headwinds for commodities as we start to talk about deflation. And then, demand just always suffers when we have, hard economic times. So, yeah, we're paying attention to it. I think it hits the livestock more. Oh, and by the way, I think pork's the opposite of the
Well, we may have dropped out there temporarily. Tell you what, we'll work on that. But in the meantime, let me get you updated on our grain trade here. Let me pull up this corn board with our quotes provided by Bar Chart. Now let's go to the big board. And on the corn, we have December all by itself, hanging on to a plus sign right now. It's up 1 3/4 cents. We're at 4.93 3/4, right in the middle of our trading range today. Now, all the months beyond that are just fractionally weaker. But boy, you talk about quiet. It is quiet in the corn market today. On the soybean market, here we go again with it trading on both sides of unchanged, just like yesterday. November soybeans now 4.5 lower. We're at 13.06 3/4, and that's 11 cents off of our overnight high. January beans now 6.5 lower at 13.22 3/4. So for a while, they were kind of flying high on the soybeans, and that's coming down for a landing now. In wheat in Chicago, you have December now 3 3/4 higher. We're at 5.84 per bushel. Oh, that would put us, we'll call it about 6 cents off of our earlier high. Not quite, almost 6 cents. On the Kansas City market, December 2 1/4 lower. We're at 6.68 1/4, and that is about 7 cents away from where we had the high last night. In Minneapolis, you have December 1.5 lower at 7.32. How about cotton? Well, on December, we now have new crop cotton 63 points lower at 83.61 per pound. Okay, that's a roundup of what's going on in our crop markets. We'll pause here. We'll come back and we'll take a look at the livestock trade right after this. All right, we're back talking with Ted Seifried of Zaner Ag Hedge, and now I want to take a look at our livestock trade today. While we have the grain markets kind of all over the place on the live cattle board right now, they have definitely decided to go lower, but not all that much. We have December live cattle down 10 cents. We're at 187.10, and you have February dropping 32 cents at 190.75. On the feeder cattle market today, we have November now down 77 cents at 248.95. But it is actually almost on the high of the day. It's very interesting how it sold off early in the day And right now, it just keeps clawing its way back. We're within a nickel of our high now today. And let's go with January. We're down 82 at 250.07 there. On the lean hog market, you have December 20 higher. You have February 37 higher at 72.67. And the biggest gain would be April, up 57 cents right now. Now let's go back to Ted Seifried of Zaner Ag Hedge and talk about this here. I think we may have had a loose end there on the grain markets. You had one comment to make, I believe.
Just a lot of technical stuff going on today, Marlon. You had corn shoot out of the gate, up 5 cents, rally 5 cents right on the open. But then the heaviness in soybeans has kind of pulled it back down. Corn had found some support yesterday, still wants to try to break out to the upside. The soybeans are running into some major resistance in the form of all of their technical, 100-day, 50-day, 200-day moving average. They're all clustered right in this area. We had a pullback from that. Now, whether this is the high of a bounce off a double bottom, or if this was the seasonal low and we're going to go higher, that's all going to be found out here in the next couple of days.
All righty. Well, Ted, I appreciate the comments. And the cattle market, it just seems like it's kind of biding its time here. We do have the cattle on feed report coming out tomorrow after the close. Do you expect anything exciting between now and then?
No, not really. I think, like we talked about earlier, we're just really tuned into what's happening with the stock market. I like the fact that feeders have come back a little bit today, even though they've broken through their 100-day moving average. But the stock market, while it is down, and it's its third day in a row being down, it has come back off the lows. So the feeder cattle are kind of almost mirror image trading what the stocks are doing. And then, live cattle just kind of treading water. But we are respecting this downward trend line that we had since we put our highs in. We're going to need something, I think, positive economically or just fundamentally to get up and over that. It'd be great. Yeah.
Interesting stuff. All right. Great perspective. Thank you, Ted, for joining us today. Ted Seifried of Zaner Ag Hedge with us from Chicago. So that's the latest on the markets here, Suzanne.